Well, welcome back, viewers, for another episode in Tech and Mortgage. Um, in this episode, we're going to take a deep dive into the evolving world of technology and its impact on mortgage industry. I'm your host, Rajeev Kumar, and today we have an exciting episode lined up for you. We're thrilled to be joined by Noel Watts. He's a Senior Vice President of Lending Operations at Lake Michigan Credit Union. Noel, thank you for joining me.
Hey Raj, good to see you, and thanks for having me on.
Yeah, it's a pleasure. It's a pleasure. And I know, Noel, one of the things that you told me before we talked about recording this episode is on this episode you would want to talk about Flatworld a little bit. So I'll let you do that. But before we talk about Flatworld, let's first talk about you. How did you get started in the mortgage industry? Tell us a little bit about your history in the industry.
Oh boy, probably goes back longer than I want to admit, Raj. But I think the funny thing is, I only ever met one person that said that they wanted to join the mortgage industry when they were in college or earlier, right? No one grows up thinking I'm going to work in mortgages or I'm going to have a career in mortgage. And so I think a lot of us share that in common. And I actually was a year or two out of college and needed work. I was pursuing a hobby that wasn't paying the bills, and and went to a temp agency. And they said, "Well, what are you good at?" And I said, "Well, I've been doing some marketing and some sales." And they said, "Okay, we'll call you next week." And I think they called me a few days ago. And at the time, the city that I was living in was home of one of the largest national mortgage companies at the time. And they called me and they said, "Well, we've got a job for you. You can start on Monday and it's in secondary marketing." And I said, "Well, that's great. What's secondary marketing?" And I remember the agent said, "Well, I don't know, but you said marketing and this is what we found you." So I showed up on the 14th floor that Monday and started to learn about buying and selling loans.
Wow. Wow. That's one of the most interesting stories that I've heard. And I agree with you. There are not many people grow up thinking they want to go in mortgages. But marketing to secondary marketing, wow, that's amazing. So throughout your career, it looks like you've worked with a lot of banks and credit unions and independent mortgage lenders. Is there a side that you prefer at all?
I don't think so. Although I'll tell you, I've been really fortunate because it feels like, I've worked with larger companies. I worked with some of the top five mortgage companies. At one point, I had my own consultancy, and so had a couple of clients, a couple of large clients, a couple of smaller clients that were in mortgage as well. But I'm really fortunate that I think I've seen a lot of sides of the business. So I've been in retail, wholesale, correspondent, started my own company as a broker. So I think I'm thankful for that opportunity. I wouldn't say that I prefer one side or the other, but I'm really thankful to see, how they all interrelate and the unique features of each one as well.
Awesome. Well, tell us a little bit about LMCU and what you guys are doing in the mortgage. I mean, we've been doing some business together for a while now, but of course, LMCU has been around for a long time, and you've been one of the, I would say, the bigger credit union players is what I can
Yeah.
is what I can see. So tell us a little bit more on what you're what are you up to? How are things looking from LMCU perspective in the mortgage side of the business?
Yeah, so just kind of explain a little bit about who LMCU is. LMCU is Lake Michigan Credit Union. And you're right, we're one of the, I think, top 15 credit unions in the nation in terms of overall assets. We've got about 16 billion in assets. But in terms of mortgage origination, we've always kind of been a mortgage shop. And we are number three among credit unions that originate mortgages in the country. So, we're usually north of 3 billion or so. And in our mortgage production, we're headquartered in Grand Rapids, Michigan. And as the name might imply, Lake Michigan Credit Union, a lot of our business is from Michigan, but we've also got a healthy branch network in Southwest Florida as well. So our two footprint states are Florida and Michigan. And like I said, we're a mortgage shop. We specialize in retail mortgage. We've got about 110 LOs, and most of them are entirely self-sourced, commission-based LOs, and that served us well, focusing on purchase business that we receive from realtor or builder relationships in the market.
Well, great, and looks like you guys been pretty doing pretty well during the COVID period and after. It's the industry's not been kind to many. Things have changed quite a bit the last few years, but looks like LMCU has been going strong. So good on whatever you guys are doing.
Yeah, and I think, thanks, Raj. I think a lot of that is, we just stayed the course and been steady. We've certainly got our LO team, our sales team that I mentioned is outstanding. Our leadership group, is very steady. We don't make, rash decisions. And so while, one of the things during those COVID times, a lot of large lenders, and especially national and super regional banks, may have offered construction lending. And as soon as there was maybe some economic uncertainty, they pulled back the reins on construction, and we just said kind of steady as she goes, and we picked up a lot of construction business during that period of time too, and that's been a great product for us. And we've been doing that construction loans for a long time, and I don't see that stopping anytime soon.
Well, that's great. That's awesome. I mean, you found your niche and you looks like you're staying the course in that, which is something that pretty much all businesses should do in a way, but not many remember that in times of abundance, the periods like we had during COVID. Everybody wanted to do everything because there was just so much business.
Yeah.
So your interaction, of course, we've known each other for a while, but we've been working together at LMCU. We've been your partner for a while now. Tell us a little bit about what were you trying to solve for when you got to LMCU and you remembered us. What were you looking to solve for at that point?
Yeah, that's a great question. And I've got some really good examples that I think, may resonate with your audience. And so I think, like you said, we've known each other and worked together for more than a few years now. And our relationship predates my time at LMCU. And when I joined Lake Michigan Credit Union, I think about 5.5, almost 6 years ago, one of my goals was to decrease the cycle time of the mortgage team. I wanted to go faster from application to close loans. And when I started to look under the hood, so to speak, what I found is we had this right off the bat, the mortgage setup team. That's where the first stop that files come into, when we get an application. They were 7 days backlogged in their queue. And so I said, well, we've got to do something about that, because that's, a large part of our cycle time right there. And so I'd started talking with credit union, who was new to outsourcing and new to doing anything offshore. And so we started talking about the benefits of that. I like to say that they trusted the crazy new guy with this idea, to bring in outsourced vendors to help us out with this. But really, Flatworld made me look a lot smarter than I am, I can tell you that. We started those conversations and had approval. I think we signed our contract with Flatworld in late 2019, like December 2019, and we started to ramp up. And by February or March, we were seeing record-setting refinance volume come in. And about that same time, the Flatworld group, had come up to speed, was ramped up in terms of production. And so, even in that record-setting busy time, we went just in our setup queue from a 7-day turn time to like a 12-hour turn time almost overnight. And it was just amazing. So that was a good start at the perfect time to lay a foundation at a new organization for Flatworld, but just as a way to build a lot of credibility and add to the success stories.
Any specific stories that you might like to share around the conversation when you started this internally and the reaction from people around, what are you talking about? Outsourcing and dealing with somebody offshore at some point.
Well, I've worked with offshore teams for a long time,
Sure.
not only with Flatworld, but many of the others. So, I've had a variety of experiences. Been a number of years since I was in India, but I'd like to go back soon. Um, and so what I had encountered in the past, either as a consultant or an employee, when I recommended offshoring and outsource providers, was a little bit of nervousness because you always see the headlines that say, XYZ company eliminates 3,000 jobs for outsourcing, something like that. And, we've made it part of our culture here. And, what I've been saying for years is, the approach that I like to use in an offshore partnership is strategic and scalable. And what we really do, instead of eliminating jobs, we work to protect and preserve. Those are the keywords that I use, the protect and preserve. We work to protect and preserve our valuable staff that has expertise right here in the United States. And so when the mortgage industry, through seasonality or through market changes, when volume goes way up, we don't wildly add staff and then have to decrease that staff, wildly a couple of months or even a year later. We stay pretty constant and always try to maintain some level of scalable staffing with contract resources like Flatworld. That allows us to manage our staff much better. But I was able to head some of those concerns off ahead of time. I always am concerned with, especially at smaller organizations that have never used outsourcing, the questions are always around like information security, reputational risk, just productivity,
Yeah.
and what to expect. And so, I think our relationship made that really easy. And I've had a lot of people ask me, well, why did you choose Flatworld? And I think for companies that have never outsourced before, Flatworld is a perfect choice because even at LMCU, we are not your largest client. I know that for a fact, but you always make us feel like we're your only client. And that goes to you, Raj, and to Rob Porges at the top of the house, to your managers. The support and the feedback that we receive is just second to none.
Thank you. That, we love what we do. We love this partnership. We love working with LMCU. And yes, the effort really is, while we may be serving a whole bunch of lenders, at the end of the day, your business is what matters to you. So we can't show the same thing if we're not able to really work with you to make your business a priority, then we're not being a good partner. So that's what we try, and I'm glad that's the experience that you're getting. Anything specific? So again, you work with a whole bunch of outsourcing companies, in your career, and yet you were, just mentioning that Flatwell might be a great place to start for somebody who may or may not have outsourced before, without without naming anybody, right? Like, what would you say were the main reasons where you would recommend Flatwell to somebody who's not outsourced before? Of course, one being, the fact that we make them feel that way, that they're the only client. But again, they're not going to feel it until they start it.
Yeah, that's right. That's a really good question. And there are certain things that you come to expect from any provider.
Sure.
But being able to just pick up the phone and have a conversation with you or with Rob or with our team leads and managers in India is very simple. And, there's an old saying, I got to know whose throat to choke if something goes wrong. And we haven't ever had anything go wrong, but I know at any time, even if we just have a question or some new idea that we're thinking about, I just make a phone call, and you're always right there. So, I don't want I don't want to turn your podcast exclusively into a Flatworld commercial. And so I think we can sort of naturally talk about these experiences and these things that we found to be true. And it's just always a very easy relationship.
Awesome. Awesome. Well, let's quickly shift to the AI and automation that we wanted to talk about. So from your experience at LMCU and just whatever else you've seen in the industry, for me personally, I started in this industry about 15 years ago, and I looked at the processes and said, wow, how does this work? And why is it really working the same this way? Fast forward to 15 years, I still have the same feeling, right? I still feel, being a techie myself, I still feel like there is so much that could be done very differently. But from a credit union perspective or lender perspective, you've been in those shoes several years. Why do you think that technology is where it is right
Hmm.
now and not where everybody wants it to be?
Wow, there's a lot of directions we could go with that, isn't there? Um, you know, in again, kind of going back to what we were talking about earlier, in that 2020, 2021 period when volume was really high and everybody needed automation because staffing wasn't available, you had the volume and the liquidity to make some technology decisions, pretty quickly to try to automate and to bring in robotics and to bring in AI and things like that. And what I found a couple of years after that period, and maybe immediately following that period, is a lot of lenders trying to undo some of
Right.
those some of
Yep.
those solutions because they were expensive and they had to maintain them and volume was down and they didn't quite have the margins that they did, a couple of years ago. Um, so I think, and we were in that same boat. There were a couple of opportunities that we had to jump in with RPA, and we didn't really get there. And I look back on it now, and I'm kind of thankful that we didn't go full circle because I might have been looking to undo some of those contracts in an effort to reduce expenses. So, number one, well, how do we find ourselves here? The industry is so fragmented. First of all, I think that's a little bit of a challenge. And then, um, it's interesting. We continue to see the statistics about the rising costs of origination. And I have to say that I think software is a part of that. We keep finding new tools and new ways to automate, um, but I don't know if it's doing anything for our bottom line. And so I think we've got to really consider, anytime we implement something new, are we going to be able to get the measurable ROI a year or two down the road? Are we actually going to see the ROI that we anticipated? That's, something that's on my mind. And, it's funny too, because I had a conversation with someone the other day and we were talking about being agile as a business and just being able to move and make quick decisions and add products even. And, I made the statement. I said, when we had paper files, we could entrepreneurially make decisions very quickly, and we could make a decision in the morning and put it on the street in the afternoon. And in today's world, we have to program the LOS, create new products, create in the pricing engine, make sure that we have documents from our doc providers, set up. So there are a lot of things there with technology too that while the goal is automation, sometimes it takes a little bit to get there.
Absolutely, I agree. And there's the element of sunk cost that I see a lot of people getting caught up into, right? So more often than not, when you're trying to automate something, you make an initial investment, you spend a lot of time and effort, scoping things out, working on POCs, working on user acceptance testing, and so on and so forth. And towards the end of that, when you're ready to go live, you figure out it's not where you want it to be. But
Mm-hmm.
now that you've spent so much time, effort, and money, it's tough to sort of back out, right?
Yeah.
So from that perspective, if you were to pick up a AI/automation project as of today, what would you say some of the, top things that people should consider and do a due diligence on even before they actually move forward with that project?
That's a really good question. And we've got an AI project right now that we're working on. But I'm going to go in a little different direction with my response,
Sure.
maybe than some might anticipate. I would say before you take on a technology project, make sure that you've got the business resources lined up outside of your normal production capacity that can
Mhm.
work as subject matter experts to make the project successful. And 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 here's why I say that, Raj. You bring up a perfect example, and this has been going on in all industries for years, is as business leaders, I think traditionally we've relied on the IT team to give us what we need.
Yes.
And so we might express a general need, and the IT team finds a tool or maybe builds it in-house, only to find out at the end it's not really what we wanted, or the market shifted, or regulatory requirements changed, and it doesn't quite get us where we wanted to go. And so I think one of the things that we found in the last few years is as we're adding automation and new technology, we can no longer just have our business leaders ask IT or make the request for a solution. And I coach all of our business leaders. Look, we don't need to be technologists and write code, but we
Mhm.
do have to have a pretty good understanding of what the technology can do for us and then what we actually want it to do in real life. And then if we can convey that to a BA, to our IT staff, our chances of success are a lot greater because they're actually going to build what it is that we have in our minds versus, kind of a running on ambiguous requirements. Does that make sense?
Absolutely. No, absolutely. I mean, I would totally agree about having the team with additional capacity so they could take on testing, BA, requirement gathering, whatever. And absolutely, you want to make sure that you have the business leaders who really know what they're asking for and what's the expected outcome for what's to be built. Now, how do you deal with that when you're dealing with a third party? Right? Like if you're building internally, that's great. But you get on a third party call, they show you all these cool things. It's a great demo. You like what you see, but you sign up and then you figure out the reality is much different. What are some of the things that you would do as a business leader or recommend others do to make sure you don't fall into that? Because that has happened, and
Yeah.
there are a lot of stories. I'm sure you've heard of that.
I hear a lot about what do they call it, Rajiv? Vaporware? Is that what they call
Uh-huh.
it?
Uh-huh.
Um, and and so I think there is a really big disconnect between software sales teams and business unit leaders and IT staff. Um, and I think we've encountered that at LMCU at different times, and I've certainly seen that in other places. You know, I guess the best advice that I could give is when you think you have a thorough RFP or request for proposal, go back and really probably double it in specificity and the questions that you're asking and try to uncover every possible thing that you can think of, even if you think that it's a foregone conclusion or it's an assumption. You really need to have a great expectation. And then I would say, circulate that RFP liberally to a number of providers so that you can have those discussions without being in a hurry. And the business side of me doesn't like to take the time a lot of times to go through that process,
Sure.
but it's certainly worth the time up front than to end up with a tool on the back end that may not satisfy what you're really hoping to accomplish.
So now switching the table to kind of give advice to those who are trying to build a solution for the
Mm.
industry. Um, of course, there is so much like when I look at it from my perspective, pretty much everything from disclosure to post-closing, there are just so much of opportunity for automation. And of course, we're trying to do our own bit with M Suite as our product, and there's so much that we're building through that. But there are many other fintech firms that are trying to solve for different parts of the problem the industry has. What would you advise as a potential customer for these fintech firms? What would
Hmm.
you advise to be their focus on specific solutions? So one, what are the areas where you really see a solution is needed as of today? And number two, how should they go about making that pitch or making that solution available to the industry in general for business leaders like yourself to be able to make those decisions and really be able to realize the benefits that you're looking for.
Yeah, that's interesting as well. And I think you got to look at it, you got to compare a little bit. I'm in retail lending right now, right? At
Sure.
LMCU, we have a retail lending channel. We don't do any TPO, but I think fintech vendors have solved for the correspondent piece and maybe even the wholesale piece with a lot more efficacy than retail lending. And so let me give you an example of that. What I would love to have is an integrated tool or a singular tool that would intake application data at the point of sale,
Mm-hmm.
scan and automatically index documents that are submitted at the point of sale by the borrower, and then extract the data, comparing it to the information that's on the application to compare the two, right? And then present an exception, all the exceptions to the teams for review. You know, an underwriter doesn't have to review every data point on the file. Maybe
Right.
they only need to review the 5 or 10% exceptions. And a correspondent, that's pretty easy. And I think as an industry, we've solved for that because you're dealing with closed loans. And so you can
Right.
identify, you know, those discrepancies and those exceptions pretty quickly. I think retail lending and software providers, you know, maybe lag a little bit as in their approach to retail lending when it comes to that holistic approach. I don't know. What do you think? Is that kind of what you're seeing as well?
Well, retail lending is a little bit harder to solve for also because it's tough to show the value when you have documents coming in bits and pieces, right? Like, for example, you talked about document indexing. If you have a 500 pager, it's easy to show the value that, hey, somebody's going to spend an hour and now I can do that in an automated way. But from a fintech or just wearing the vendor hat, if I'm going to go and talk to a retail lender and say that here's an automation for document indexing and data review, more often than not, I hear the inputs that, oh, my processors don't even spend that much time because they just get this W-2 and they place it where it needs to go. So I think from a vendor perspective, it's a little bit harder to show the value with the retail lender, but I can tell you, I'm sure there are other vendors out there, but even M Suite, like just listening to what you just described, don't be surprised if you get a call from somebody on the M Suite side to say, "Hey, you should look at what we've got."
Yeah.
Because to your point, yes, even for us with M Suite, like we started solving for more of the correspondent and the wholesale side of the business, but as we've looked at it and as the capability expands, retail is really the big focus now. And some of what you just talked about has been sort of partially solved for. It probably needs to be just brought together as a platform, which presents itself more comprehensive to the retail lender. So yeah, that would be my comment as one of those fintech firms playing in
Yeah.
this industry.
Yeah. And do you think, Rajiv, that those tools lie outside of the LOS, or do you think that they're, you know, the LOS providers are looking to create those tools within the database?
Well, the LOS providers, it's going to be hard for them to create it. I mean, we've seen multiple LOS providers try to do it over the years without naming, but
Sure.
you know who I'm talking about. Unfortunately, they've not been able to successfully do it, right? For whatever reason. So there's definitely going to be a room for play for fintech firms outside of the LOS provider. I think the challenge that we see right now is how do these fintech firms integrate with the LOS provider in such a way that the processors or the underwriters of the world don't have to come out of the LOS to do whatever they're looking for. I can tell you from a fintech vendor perspective, a lot of these LOS companies, they want a bigger piece of that pie.
Hmm.
And it makes it difficult for the fintech vendors to then share a big piece of the pie with somebody else and still show a lot of value to the customer. So that's a conundrum we're in. We're all looking to solve for it, but I don't think we can just rely on the big LOS providers to solve for these.
Yeah, I agree. And we talked about outsourced labor solutions too, right? But I do see a movement of outsourced providers, offshore providers, making that switch to where everybody's kind of developing their own technology and AI tools, so that at some point in the future we may become less reliant on human outsourced tasks and more reliant on machine outsourced tasks. And I think you're doing some of that too, right?
Absolutely. I mean, that's the story of Flatworld, right? So we've known each other for long, and let's say if somebody spoke to us 10 years ago, all we had was outsourcing, right? That's all we ever did. 8 years ago, the story changed a little bit. We started on this path. As of today, Noel, I'm having probably 90% of my conversation around automation and AI, and probably only 10% on outsourcing. Because in today's world, nobody wants additional staff, right? But we're all trying to find out the best way of reducing operational cost so we can have a little bit better margin.
Yeah.
And AI and automation has a role to play there. The question is, just like anything else, right? If you have the right partner, it's great. If you don't, then you have another dead investment. But this is not something is going to be solved for right away. But it's going to be a journey for the industry, and we'll definitely have to talk more on this topic. But for today, I think we have taken a lot of time for our audience. So I want to thank you very much for taking this time out, Noel, and thank you for all the insights that you brought to the table. I'm sure our audience is going to be thrilled to hear from you.
Hey, Rajeev, thanks again for having me on. It's a pleasure to see you and good to talk with you as always.
Thank you very much, sir. Have a great day.
Thank you.